Hey there, James Preston with you for Kalkine, and in this video we'll take a look at what a market indicator is. But first, make sure to subscribe to the channel and press the bell icon to stay across the latest videos from Kalkine. So what is meant by the term market indicator? A market indicator is a quantitative tool used by analysts to predict market moves based on financial data and other relevant economic parameters. A market indicator is a subset of technical indicators and is used by investors to decide their investment-related decisions. Market indicators typically use formulas and ratios to interpret financial data. So how do market indicators help in predicting market movements? There are a lot of similarities between technical indicators and market indicators. For example, both of these indicators use the statistical formula for a series of data points to conclude. However, unlike technical indicators, the market indicator uses data points from various securities instead of a single security. Also, many times market indicators are not plotted on the same index price chart, but instead they are plotted on a new separate chart. Analysts use market indicators to predict market fluctuations. Market breadth indicators refer to those indicators formed after analysing the number of companies that have reached new highs against the companies that have either declined or reached new lows for a given time. Moreover, market breadth indicators provide the investors information about the current market trends and help them ascertain future market trends. What are the different types of market indicators used by analysts before making any investment decisions? Though there are many market indicators, the few most common types of market indicators are as follows. Market breadth. Market breadth refers to the indicators created after analysing the number of companies that have reached new highs as against the companies that have either declined or reached new lows for a given time. When the number of stocks showing positive signs exceeds the number of declining stocks, it's a positive market breadth. Market sentiment. Market sentiment indicators compare the price of a security vis-a-vis its volume of trade. This informs if the investors believe that the price of stocks will rise, or they are the ones who think that the price of stocks will decline. The put-call ratio is an example of market sentiment. The put-call ratio is a popular indicator which calculates the number of put options against the call options for a given period. The put-call ratio helps the investors gauge the sentiments of the options market more efficiently. Generally, if the put-call ratio is more than 1, it's considered an indication of a sell-off. In contrast, if this ratio is less than 1, it's said to indicate an opportunity to purchase. Moving averages. Moving averages is a technical analyst tool. Moving averages are useful in segregating relevant and irrelevant data points to smooth out the price data for a given period. Since moving average is based on past prices, it's either a trend following or lagging indicator. A constantly updated average price can be created using the moving average. There is a close relationship between the lag and the moving average. This suggests that the smaller the period for the moving average, the lower the lag, and vice versa. Based on this, the degree of lag for a 200-day moving average will be more significant than the degree of lag for a 20-day moving average. For stocks, the 50-day and 200-day figures are regarded as vital trading signals and are therefore widely used by investors and traders. On-balance volume. On-balance volume, commonly known as OBV, uses volume flow to forecast fluctuations in the stock price. OBV is a technical analyst indicator. Based on volume change, OBV is used to project the timing of major market movements. Hence, rather than predicting the price movements, unlike other indicators, OBV confirms trends. It's believed that the volume of trade is a vital market indicator. Therefore, to track large and institutional investors, analysts mostly refer to volume numbers on the OBV. If you enjoyed the information contained in this video, then make sure to like, share, comment and subscribe, and of course don't forget to press the bell icon to stay across the latest videos from Kalkine. For more information, just head across to the website kalkinemedia.com. I'm James Preston for Kalkine.